Welcome to Sound DeFi. I'm your host, Chris Berg. We got a very special guest back for a second time, Shari Noonan. She's the CEO and co-founder of Rialto Markets. Shari, great to see you. Congratulations on all your success as of late.
Thanks so much, Chris. It's great to be here.
I know we had you on back in June, but what is Rialto Markets? What do you do?
Absolutely. So Rialto Markets, we are a FINRA member broker-dealer. We also operate an alternative trading system, so a secondary market across private markets. So we do primary issuance and secondary trading across all private markets in digital forms. That means blockchain-based form and traditional form. So that's what we do. We have had our best success in terms of helping private companies raise capital from the public via Reg CF and Regulation A. And we also do Regulation D raises for companies in a self-hosted form. So it looks like the company's website. So it's a brave new world out there. This is on the back of the Jobs Act. That's really our core business that we started with. And we are venturing into new and exciting places with our digital format, with some new recent announcements and moving into the institutional space. But that's the core business that we started with.
Let's go right there to some of the new announcements, because that's what I was going to ask. We had you on in June. I know that you'd mentioned there was a company, I believe, down in Arizona was doing electric trucks. You did, I think it was a Reg C there. Information on that would be great. But also just what's happened as of late, or what have been some of the changes since June for you?
Absolutely. So the companies in our primary space, the Regulation CF and A companies that we've been helping raise, we've got about 1.3 billion in raises that we're working with. And that's across 30 some companies. The company that you're mentioning in Arizona, that's Atlas Motor Vehicles. We worked with them on 3 different raises. They actually went public in September, which was very exciting. So we worked with them all the way through several raises to their public offering on NASDAQ. So that was pretty extraordinary for us in the fall. And really, it's one of those showcases, and we hope to do that with many more companies. We were really excited to be a part of that.
Can you walk us through some of that? It's so funny because I was this close to buying some shares when you had the announcement, and I think something took me away, and I was like, I'll get back to it. And now that they've gone public, I was like, oh, it was one of those companies you saw and you're like, okay, these guys are onto something. It just would be fun to even be a part of how you were utilizing tokenization to jump into some of the raise. So they're going through this raise. And one of the things I think you're seeing so often now is people are talking about private equity and keeping the money in private equity because there's not as much transparency, not as many regs. So what made these guys say, hey, we've done these private raises, it's gone, let's go IPO this thing?
What we're seeing with a lot of companies is we're seeing companies start off, look to raise privately, and they're saying, let's harness our community. So I'll start way at the beginning with the Atlas story. Let's really harness our community and take it step by step. And that's really what they did. So every stage of their growth, they looked and they said, what's the best kind of financing for the company, for the community, for all of our stakeholders at this point in time? And then when September came, they looked at the state of the company and where they were at, and they said, the best thing for our stakeholders and for the company really is to go public. And that's what they did. And it was really an exciting time. It allowed many of their shareholders, we have a secondary market, so shareholders can monetize. They were not on our secondary market, but there were many shareholders who had bought at 11 cents the very first time that they had offered stock. The highest that stock got, I think, was $237, somewhere in the 200 and some. It came back down. It was one of those pops and then came back down. But it really was a success story for the very early investors. And I think that's, to me, what I'm the future of in terms of early stage capital, allowing the sort of everyman, all investors to be able to participate within their means, within a framework that's reasonable in early stage companies and participate in the growth, participate in the journey, in the excitement, and be part of it. If you look Atlas did, they really took people behind the scenes into the factory. It was really exciting. You participated in the journey, and then you're still participating. People still receive emails now and participate in the journey now that they're even public. So for companies that are looking to avail themselves of this type of raise, I really would recommend that they take sort of the playbook of an Atlas to build that community and move forward in that way.
Oh, I was going to ask, share a little bit about where Rialto Markets fits into that puzzle, if you will, and then talk about some of the raises, because there are obviously a lot of people out there. I've got a buddy right now with an AI company looking to raise some PE. So I'm sure he would love to look at what Rialto did. So talk about your piece in that, and then what were the raises, a couple hundred million, or what were they?
Absolutely. So what the Jobs Act did is, this was probably a little over 10 years ago, is the SEC took a look at the landscape and said, it was actually Congress, but the SEC created the framework, said companies are going public later. And what that means is regular retail investors can't avail themselves of these companies. It's only accredited investors that can participate in these early stage companies. And so by the time they're going public, that growth capital is out of the system. And so they created Reg CF and they amended Regulation A was around. So companies can raise today up to $5 million every 12 months from retail investors and up to $75 million every 12 months via Regulation A. And so that's quite a bit of money for companies that are looking to raise from the public. So you can do it in one of two ways. You can go to a crowdfunding portal, or you can do it via self-hosted website. That's what we do. So we're a broker dealer. It would look like it's on your site. So we work best with companies that have built communities or that are attractive to communities. So for example, think breweries, think types of companies that attract large film companies that are out in the film industry where there's a general gravitation towards building and cultivating a community. Those are the types of companies that we work really well with. ESG companies, that also is something that we work quite well with because people are starting to vote with their feet a lot in terms of gravitating towards investing in ESG companies. So those are the types of companies that we work the most with. And what we really do is we provide them with all of the infrastructure to run a capital raise in a compliant way in the securities framework. The investment technology, the payment rails, so people can invest via a credit card or ACH or wire, and then all of the anti-money laundering and know your customer checks. Our operations team performs that, and then reconciling all of those funds in the escrow account and then dispersing them and sending the investor names to either your cap table management or the transfer agent or whomever the company might use. So all of that administration, we perform that. For a Regulation A, you actually need to have a broker dealer in certain states to run these raises. But also when you're raising money from thousands and thousands of people, most issuers want that so that they don't lose track of anything. But that's really what we do on a day-to-day basis. And this part of the industry has grown quite tremendously as companies are looking for different ways to raise capital apart from traditional venture, or maybe even to supplement traditional venture.
Yeah, and it was fascinating because if I remember correctly, I think I could invest for $1,000. It wasn't a large amount.
Exactly. Some companies it's 1,000, some it's 500, 100. It varies depending on the company, but it can be quite a modest amount, which is fun and exciting. So I think it's really going to change the landscape, and I think it provides a really unique opportunity for investors as well as for companies.
You have any other tips for us? Because I botched that last one. I'm going to listen.
Well, right now we've got 18 companies that we're working on their raises. We've got about 51 that we're preparing to launch in 2023. I can't believe we're in the final days of 22. It's been quite the year, but there's a variety of really great companies that are up and coming, from medtech to ESG. So I really think that this is an exciting time to be in the crowdfunding and direct to retail space.
Let's talk about Rubicon Carbon. You recently
Mhm.
launched a long-term partnership with them. What are they? What's the partnership?
So we're absolutely thrilled to be working with Rubicon Carbon. They are a company that has been funded by TPG's Rise Fund. They are really exciting and fund that they're creating carbon-based offsets for corporate companies to be able to purchase to offset their carbon emissions. So I really think that the product they've created is innovative. It's the way forward. And they're headed by Tom Montag, who was the COO of Bank of America, have a really stellar leadership team and just a first-class management team behind them. So I'm really excited to provide some of the support and technology to their product.
I don't want to get too much in the weeds in what they're doing, but are they utilizing blockchain to create a quantitative aspect to it? And I asked it because here in North Dakota, we're the only state in the union right now that's actually utilizing carbon capture. We're able to measure it underground. We've got this sort of geological jackpot here. So how are they measuring it? And are they utilizing blockchain to keep track of all this?
So they're working with a number of partners. So on their website, you can go to their website, they're working with a number of partners. And that's one of the things that's really exciting about what they're doing. If you think about ESG, it's really important to make sure that you've got validation and verification around what's happening in carbon capture. So that's one of the advancements that they've made. And yes, and the fact that we have a mandate for digital securities makes us a nice partner to work with them.
All right. Well, if we can help out anyway, let me know because there's some good things happening
Yeah,
here in North Dakota.
absolutely. That sounds great.
It's an interesting time right now. We talked about what's new since June with Rialto. If you want to look at the year as a whole, there's been a lot happening since really November 9th or so, but just a lot going on. But what's interesting is even in all this conversation that's taken all the oxygen out of the room, you still hear major institutions saying, look, tokenization is not crypto. And let's just be clear that the industry is going towards tokenization. Do you want to speak to more of that?
It's been really interesting. Since November, we've fielded quite a few calls, and we've been here for a number of years. We got our mandate in 2020 for digital securities. And it's been nice to start to field some calls from folks who say, okay, these need to come under a regulated framework. How are we going to future-proof our business? We really only started getting those calls, I would say, in the beginning of the year, maybe around the second quarter of, call it May, June. Around November, there was a little blip where everyone tried to reassess for a bit what was happening. But in the last few weeks, I think people are back saying, yeah, we think that regulatory clarity is coming. We know what needs to be done. And this is how we're moving forward. We're very use case focused when we talk to clients, when we talk to potential clients. And certainly when we first started speaking to, for example, Rubicon Carbon, we had a use case and we moved forward on that basis. Similarly, we're speaking to several funds, private equity funds and other funds, and we walk through the use case for that. What is it enabling? I think some of the people tend to love the sort of bright, shiny object and say, this could be really neat. This is fun. It's new. Let's see what this does. And to avoid getting a little too caught up in the newness and really think about what this delivers, we really focus on the use case and the applicability, and that helps us stay focused. And we've got several use cases that we're working with different private equity funds on right now. More to come on that in probably early 2023, early Q1, late Q1, but that's pretty exciting.
Especially when you look at the numbers. I know that you guys are got a webinar coming up pretty soon. We'll talk about that in a moment. But Forbes suggesting that private equity markets is going to be $30 trillion by 2030. That's not too far away. And so when you talk about some of these use cases, without disclosing too much information, what are some examples of the use cases for PE funds?
So when we talk about the use cases, it's really either expanding the distribution network, so going down to retail, expanding it down to be able to get to retail in a cost-effective way, and dealing with a lot of those intricacies around flow of funds, around calls, distributions, things like that. That's the first use case that we really see commonly. The second use case is creating a brand new product. And the brand new product that often comes to mind that I think about is, take, for example, music catalogs. So a lot of PE funds have been purchasing music catalogs. Stevie Nicks, a lot of other artists have been selling those music catalogs lately. If a private equity shop were to take a slice of that, be able to make that a Reg A, to hedge part of that portfolio, sell that to the fan base in a way that is able to be administered effectively via the blockchain, that could be a really interesting product for a fund. And that's completely new. That's a completely new product now that you're creating that's never really existed before. So that's what gets me excited about this space. There's the one space where you're taking something that exists today and you're creating a new distribution network, but then creating something that's completely new and exciting. That's really where I think the industry's headed.
Let's talk about that. So I think it's 1% of the 27 million private companies are right now trading on secondary markets, thinking about utilizing tokenization. What's the gap and how do you start to get more adoption sooner rather than later?
Yeah, and I think this has been a challenge and it continues to be a challenge. And I think a lot of companies want the option for their investor base. A lot of professional investors, they need the liquidity in their portfolios and want to offer it to their LPs. So I think this is going to be a sort of slowly then all at once type situation where there are a number of prerequisites that need to happen. I think there's certain standardizations that need to happen in terms of how the companies are set up, right of first refusal, for example, certain ways that companies need to come on to these trading platforms and interactions with the cap table. We've got integrations to make sure that the securities are freely tradable, that there aren't any encumbrances, that those securities can be traded automatically. But there are other issues, especially when you're talking about venture-backed companies where the actual securities themselves are quite complex. Now you can create smart contracts and you can create other triggers, but it makes it much more complicated. One of the reasons we like the Reg and liked the Reg CF space is because they are quite simple securities. So you can make them more widgety, for lack of a better term. You can take those and standardize them and put them on an alternative trading system in a much easier fashion. However, CF&A as a totality of everything that's out there still represents a small sliver. So I think to take that and apply it across all private companies, there's still a lot of wood to chop. And there's going to have to be some sort of standardization. And it's almost like, I don't know if you're around or are familiar with the creation of ISDA, the standardization of derivatives agreements. So there was this international standardization of derivatives agreements, and everything was very bespoke in the derivatives world. And then there was this standardization contract that came about, and then that allowed for the velocity and some sort of agreement between firms to take place, which then exploded that part of the market. That's, I think, what needs to happen to a certain extent in this world as well, because everything is still very analog.
Yeah, and I think to really educate people so they can decouple crypto from tokenization. I think many people are collapsing that, and then they just see the SBF story and think, okay, I think if we can help people realize, no, this is not that, will be a big help as well. You got a big webinar. Do you want to comment on that, or?
We're very excited. So we have a webinar coming up in January, and we're going to be talking about 2022, what we saw in 2022, some facts around who raised capital, what we saw, a lot of information around the capital that was raised, sectors, amounts, a lot of different data around that, and then looking forward to 2023. So really that's our webinar that's coming up, and I think that's early January.
If you don't mind, walk us through, number one, how can people go register for this webinar? And then number two, take me out 12 months. We're in December of 2023. Where is this industry at?
Yeah, absolutely. Please go to rialtomarkets.com and you can register on our website. And then in 12 months, it's going to be a fun year. I'm looking forward to the next 12 months because I think the environment's going to be an interesting environment. I definitely think ventures going to be challenging, which will mean that for issuers, they're going to have to get creative and perhaps look to other sources of funding. So from that perspective, this is a source of funding, especially if you have a community. I think this is a great source of funding. And if you are a community-based company, it's a great source of funding to help align yourself with your community and help your community come along for the ride with you. So I really do think that in the future, this is going to become part of your toolkit, your capital raising toolkit, as a company begins their journey. So I think it's going to be an increasingly important part of a company's journey. And we're going to see this part of the market grow even more than it has already. So that's 12 months out. I think that 12 months out, we're definitely going to have a lot more regulatory clarity in the digital securities side of the business. The SEC has a challenging road ahead of them. And I think we're going to have a tumultuous year, but there will be clarity in a number of directions. I'm looking forward to that. I do think that following that, sort of as the fog clears, that will set then the road up for the future, which is the good part. Because I do think that the actual technology underpinning digital securities really does have quite a bit of usefulness in terms of private markets going forward in the future.
Shari Noonan, CEO, co-founder of Rialto Markets. Again, January 10th, 1 p.m. Eastern, they're going to have their webinar, so check out rialtomarkets.com. This is the Sound DeFi podcast. I'm your host, Chris Berg. We'll see you next time.